What's up, guys? Welcome back to DCA. Today, what we're going to do is take a look at where Bitcoin is right now and where we may be going. Back in the end of January, we got all the way down to $33,000 and then had this large move to the upside on February 4th. So we went up around 11.5%, going from a low on the day of 37,000 up to a high of 41,780. So what we want to do here is take a look at where we may run into resistance and what levels we may use as support in the coming days. Yesterday, I talked about the question of whether this is a bull trap or not. And quite frankly, myself, just like many other people, I'm not entirely sure. We can look at various factors that are influencing the market and sort of make judgments based on those. So we looked at volume yesterday and we said that, the volume has been decent, but it's been, quite frankly, nothing to write home about. A lot of the on-chain metrics are showing us that there's still not, this intense retail interest that we typically need to have these parabolic type events. Although we have seen that, for instance, in the move that we saw in July into August and then eventually into November, you don't necessarily need a large retail interest in order to get a price move to the upside. So we saw with relative lack of retail investment in the market, we saw our price go all the way from 30,000 obviously up to our high at around 69,000. So we know that you don't necessarily need that type of retail participation to get these moves. With that in mind, let's take a look at where we may run into some resistance coming forward. So what we're using here is the volume profile visible range. And I've used this multiple times on my channel. And if you don't know what this is, it basically just gives us a breakdown by dollar, how much volume occurred at that level. So why does that matter? We could always draw support and resistance levels on the chart by, looking at various price points by closes or wicks or however we do it. But what this does is this simply just tells us at this level, there was a high quantity of volume. So for instance, when you see this horizontal axis graph, when it extends out further, this indicates there's more volume being traded at that level. So for instance, in this region and in this region and in this region, when you're in these spaces in between, these are called low volume nodes. And these are where there just simply isn't much volume. Whereas these larger areas are called high volume nodes. So I've marked in green, for instance, one area of a quote unquote high volume node. Now it's somewhat subjective where we draw the limits at, but remember on this channel, we're looking at the long-term price history. So we're not quibbling over, oh, is it $40,600 or is it $40,200? That's really not of a great concern to me. And, if you're someone who's highly interested in day trading, etc., in my opinion, you're sort of worrying about what at the end of the day is something that's inconsequential. Because the reason that you should be investing in crypto, or in my opinion, why one should invest in crypto, is for just the absolutely incredible long-term gain potential that exists. If you're someone who's over here worrying about 10, 20, 30, 40, 50%, in my opinion, you sort of have lost sight of the incredible investment opportunity in front of you. So that's sort of how I'm approaching the market. So, roughly this is an area where we have a higher volume node from this level all the way down to 31,000. So as I have it drawn, it's $40,600 all the way down to around $32,000. Okay. Because in between that zone, you can see in between here from 46,000 all the way down to this $40,600 level, you have relatively lower amounts of volume. And this plays out on the chart if you just take a look. Notice how we fly right through this gap here, this area here, this low volume node. We typically fly right through that level and then get stuck at other levels. All right. And you can see it up here as well. We typically don't spend very much time in this low volume node. We do spend some time in it naturally, but typically you'll notice there's very large candles and these extend right through these levels. And that's just simply because there there aren't many individuals holding the asset at these levels. Okay. So roughly 46,000 down to around 40,600 constitutes one of those levels. Now, more recently, we have spent a bit of time in that level, but notice that, you know, back in September, we spent a few days there. We spent about 2 weeks here in January, and now we've been here for a few days. So, in general, my thinking is whichever way we're going to go, we'll likely head there fairly soon, unless for whatever reason, we get into a sort of back and forth battle between the bulls and the bears at this level. And then certainly, you could add volume into this range and it could eventually become a high volume node. Nothing necessarily precludes it from becoming that. All this is showing you is where statistically speaking, you're more likely to have individuals holding the asset and therefore creating levels of support and resistance. Okay. So with that out of the way, what we're saying then is on the way down, where are we hoping to see support at? Well, this upper band of this high volume node, so somewhere right around 40,000 up to 40,600 is probably going to provide us some degree of support. And if we break through that, like we did back here in January on the 21st, notice we broke right through this level. And what happened? We went all the way down to around 33,000. And we've just been grinding back up through this high volume node during that time. And that's sort of reminiscent of what we saw back in May. We dropped below this level. Once we got there, we just fell down. And recall, back in on May 19th, we had a wick all the way down to $29,600 on that day. So, like I said, very reminiscent of what we saw back then. All right. And then we just sort of created a ton of volume throughout this level as we sort of went on a long trudge downwards from the end of May all the way through July until we were able to break back through again. And notice right when we got back to this around this $40,000 level, that's when we started to meet resistance and we needed to come back before we could go up again. And so, that's sort of the first thing we should be looking at. I wouldn't be surprised if we needed to come back down and test right around this level yet again, like we did back here. Doesn't mean we have to do that, but you have to recall a lot of people who bought down in these levels have made a fair profit, especially the short-term traders. They've made a fair profit in the last several days. Okay. So we may come into some selling pressure. And from there, it's going to depend on, can we do something like we did back in August and then get increased buying pressure driving us back up, or are we going to meet, individuals capitulating who are FOMOing in right now? And this is what short-term holders often do, or more likely to do. It doesn't mean they all do this because, it all comes down to the degree of discipline, but we often see that if the trend doesn't continue in their favor, especially those using leverage, they get liquidated if we come back down, and then we sort of trend back down for some time until we head back up. So that's the first thing, is sort of my expectation that we may see a retest of around this $40,000 level. Then what we're looking at is this as a level of resistance, and that's this $40,600 level, or sorry, $46,000 level. And you can see right here, this level is actually, there's quite a bit of volume traded in this 46,000 all the way up to around $50,000. So I think that, this level could act as sort of a critical point if we continue up. Like I said, I don't know that we're going to continue up, but if we do, I'm expecting this level to be a critical level. And we're going to want to see the market be able to hold these levels from 46,000 up to 50K. If we can't hold that, you could see us flying back down back into these levels again, right? Because as we said, unless we spend quite a bit of time here, I think you're likely going to see what we've seen every other time that we're in this zone where we just go right through it, slice through it like butter. In fact, this, 2 week period that we stayed in this 40.6 up to the 46K level, that was the longest that we've been in this zone. We've otherwise just went right through and back up. Okay. Then you have another low volume node. Okay. So approximately from 50K up to 55K. And you see the same thing here. We don't spend a lot of time in this zone. We either go straight down and then straight back up, or straight back down. We got rejected within a day or two, and then we only spent a day or two in this level here. And then again, only a day or two here. So notice every time we're in this zone, there's a large candle and we move right through it. So just like where we're at now, I'm not expecting a lot of time to be spent between the 50K up to the 55K level. Then you run into your next high volume node, which is up here at around 55K all the way up to 60K. And obviously, if you get up there, it's all going to depend on so many factors in the market, like what's going on the macro level scale, etc. And quite frankly, as we're sitting at 42K, we can worry about these levels when we get there. For the time being, we have plenty of checks ahead that we need to get past before we're able to even start thinking about numbers like 60K plus. So in the shorter term, I think there's two numbers you need to keep in mind. The first being 40K, approximately 40 to 40.6K, and on the resistance side, 46K. So we're going to want to hold that 40K level, and we're also going to want to get past the 46K level. If we can do that, in the shorter term, maybe we'll be in business. I'm not convinced yet. I need to see, I'd like to see more volume coming in. I know a lot of people are saying that, this is an obvious bull trap. And quite frankly, if you go back here and look at what we saw back in June, recall we went down to around 31K here and then came all the way up to around 41.5K. And then what happened? We got rejected off this level here and then went all the way back down and needed to spend it was about almost a month exactly. We needed about a month more after we made that move. So it will be interesting to see how this plays out. But, at the end of the day, the levels that I'm watching for are going to be right in this area. So, what do we do in here? Do we get rejected off this 46K level, or do we just go right back down and bounce down from the 40K level? So that will be important to watch going forward, guys. Just remember, what we're talking about here is something that I don't really like to talk about, but I know a lot of people are interested in it at the moment. So it's worth mentioning. I don't really care what the short-term picture is. I think a lot of this is just simply noise. If you watch the channel, you know that I am extraordinarily long-term bullish on Bitcoin. And my belief is that we're going to go up. It's just a matter of how long it takes to do it. So, we've talked about the, sort of the macroeconomic issues in the market right now, the general market, not just crypto. And I think that these could ultimately have an impact on crypto itself. So it's worth taking note of. It's worth keeping in mind that there are some sort of concerning issues in the market as a whole at the moment, and just realizing that they can impact crypto. I think in the long run, we're going to be fine, but in the short term, I'm not willing to say that, just because we've went up 10K or so in the last couple of weeks, that the bull run is back on and everything's fine, because I think there's some serious hurdles that we need to contend with still going forward. And it will be, if nothing else, interesting to see how they play out. A lot of this is why I always talk about dollar cost averaging into the market. And, I'm sure people that watch the channel are sick of hearing it, but at the end of the day, it's the number one thing you can do to sort of remove the risk from the market for yourself. If you're buying at a range of prices, then quite frankly, it doesn't matter what the price is doing in the short term because, it's like being an investor back in, you know, 2018 or 2019 or whatever. It doesn't matter if you're buying up here as long as you buy some more down here, 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 because your your perspective is in the long term. You're thinking when you're the guy buying in this area, at the end of the day, what you're doing is thinking about when the price is up here. So that's the type of perspective that I keep, and that's how I approach the market. And that's why, it's interesting to watch the market do this in the short term, but ultimately it's nothing but a passing interest to me because I'll be dollar cost averaging every week like I do regardless of what the market does in the short term. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual,